Namaskar dosto, welcome to my channel Stockonomics. In this video, I'll be sharing some relevant points around how to analyze a stock from fundamentals perspective. So let's get started. We will be analyzing HDFC Bank stock today. As you all are aware, HDFC Bank announced its quarterly result recently, and since then the stock has been moving sideways. So now let's try to analyze the stock from fundamentals perspective. First point is from the macroeconomics and sector perspective. Is this a growing sector? The simple answer is yes, because the growth of any economy, whether you can consider any developed countries like US, UK or Singapore, the banking sector development or growth was very crucial for the development of the country. The banking and finance sector development played a key role, and with the latest S&P Global Rating report, India is projected to become the third largest economy by 2030. And for this to happen, the financial inclusion of the population of India is very important, which is the focus area for government too. If you also look at the Indian consumer's mentality, it is changing from being a saving one to a spending one to get a certain kind of lifestyle. The banking sector penetration and the usage of the banking products like credit card, consumer loans, etc. are bound to increase. In short, this sector is a growing sector. The second point to evaluate is the market cap of the stock. As you are aware, HDFC Bank has the highest market cap amongst all its peers in the private banking sector. The market capitalization is somewhere around 11.67 lakh crores. And the stock is also part of Nifty 50 and Sensex index funds. If you look at the revenue of the bank, it has grown by 30% over the past 3 years, while the compounded profit has grown by 26% over the same period. Also, since the merger, the quarter-on-quarter growth has also happened in these parameters. But the stock price, if you compare it from 3 years, hasn't moved much. The stock has been moving sideways. If you look at the price at around February 2021 and during the similar period, the price of the stock has actually remained within the range of 1500 to 1550. And even today, if you look at the price is somewhere in the similar range. But the profit of the banks have grown substantially over the years. So what has happened in the stock is that there has been volume aggregation in the stock over here, and post which it moved upwards. And then on, it has been moving and trading in this specific channel. So the time correction has happened in the stock, and now if the stock is able to break the resistance level over here, then there are chances that after confirmation the stock can further move upwards, and there is a potential of at least 40% increase in the price from where it is today. And if the stock breaks the resistance level, there are high chances that the stock can generate at least profit of 40% over the next period, while it can go up to 60 to 70% as well. Now, this price correction can happen over the period of 1 year, 2 years or 3 years. But fundamentally, the stock is very strong, and the institutional investors at this moment are trying to beat it down so that they can buy it at a lower level, while the retail investor will try to get out of it, losing all its hopes, and then this can rise to a higher level and give a big run up. Now let's look at the quarterly report that has been shared by the bank. While gross NPA and net NPA have been lower as per the industry standards comparing it to the peers, and is maintained over the quarter at 1.2 and 0.3% respectively. Net interest margin has been stable at 3.4%, while capital adequacy ratio is good at 18.8%. While CASA ratio has been maintained at 38% and seems to be good, but the loan advances have been growing slowly at 1.6%. Now you need to understand this further. The HDFC Bank has a very conservative approach in terms of giving out the loans. So the quality of loan is more important to them than quantity. They want to be sure that the money that they give out in the market, they get it back. This reflects in their retail loan book as well, which has a large number of self-employed and white-collared customers where the default ratios or rates are comparatively very less. While if you look at the FII and DII mix, it has been maintained at 81%, which is high. The bank seems to be expanding as well because it has increased the number of branches by 917 more branches this year and adding about 600 plus branches during the Q4 quarter itself. Also, the bank has made floating provisions on its loans. While if you look at the regulations in the sector, though the banking in itself is a regulated sector, but there are no red flags as of now which are hindering the growth of HDFC Bank. The management of the bank seems to be strong at this moment, and this does not seem to be any major concern area. Now from my perspective, HDFC Bank is a good buy, but I'll request you to please hear other perspective also, do your own analysis and then subsequently make your own decision. As this video is not a stock recommendation but just a way to help you understand how you can analyze a stock from fundamentals perspective. I usually invest 5 to 7% of my total investment in a stock because you never know what regulations or macroeconomic situation can change the dynamics in the stock market. If you like the video, please do click the like button and share this with somebody whom you feel that this can be relevant. And please do subscribe to our channel so that this will motivate us to further make such videos which can help you understand the in-depth analysis of a security or a stock. Thank you.